Please welcome to the stage, Jeff McCann is founder and CEO, Apollo Insurance. Jeff has an update on how insurance might look over the next few years in a rapidly evolving property technology environment. So we're going to look at property technology, its impact on insurance, one of the more innovative insurance providers in Canada, Apollo Insurance, and its founder and CEO. Please welcome to the stage, Jeff McCann.
Thanks a lot, Brian. See, they got the blinds down low. It's late in the afternoon. They got the insurance guy up here, so we'll try and keep this painless. We got about a 15-minute talk here. So what's Apollo? Apollo is a leading digital insurance provider. So we've built an insurance company from the ground up over the last 5 years. We've raised roughly $50 million to solve this problem. And what we do is we integrate with PropTech companies and multifamily housing landlords, including universities and REITs, to provide renters insurance solutions entirely digital. We're also integrated into Yardi and other PropTech platforms to be able to do data exchange and make it easy. And we'll talk a little bit about why and some of the dynamics of the market right now that are really important to have a residence insurance program on your campus. So the Canadian insurance market's roughly $60 billion. That's what we spend as Canadians every year in property and casualty. So that's fire insurance in case this thing burns down, liability insurance in case there's slip and falls. And there's three main drivers of this market right now. One is catastrophic events. Everyone talks about climate change and hurricanes and that. Every single thing you've heard today is insured somewhere by somebody, and they got to pay to replace that thing. The second one's inflation, and the third one is the global reinsurance shortfall. The summary of this whole thing is insurance prices are going up. Not only is everything getting more expensive, but insurance is definitely getting more expensive. 2022 was the third largest year in Canadian history for catastrophic insured events. So Fiona was an $800 million payout. We lost $3.1 billion just to catastrophic event. That's not fender benders and everything else in the market as well. But you can see from the map, we had the atmospheric river and king tide. They're coming up with better and better names every day for these storms. In British Columbia, obviously the flooding in the valley. We saw ice storms throughout the prairies. Hailstorms continue to be a large problem, and the hurricanes that have come up the East Coast. And so we're seeing an increase across the industry of these. Now, this is important for two reasons. One, it means that we're driving prices up because those insurance companies want to get their money back. But the other thing is this is displacing students, and it's changing the way we need to think about how we're housing and managing multifamily residential. What do? Do you put everyone in the gymnasium when this happens, or what are we going to do next? The second thing that's driving prices up is inflationary pressure. So it's a tight labor market, materials more expensive, so supply chain's an issue. What does that mean? The building burns down or you have a claim, it takes you a lot more money to replace that and to rebuild those things. It takes you more time and energy when it comes to getting things up to code. If all the EV chargers and that have to get installed, well, guess what? It's going to take you that much more time and money, that much more bureaucracy and permits to replace things. And that means that your building's more valuable, which means your insurance price is going up, but it also means when there is a claim to replace things, it costs more money. The insurance companies have to increase their prices. We're seeing that increase in values not just in buildings and in property, but we're also seeing that in cars. We heard a lot about EV and electric vehicles today. A fender bender used to be you bang out the steel, it's fine, maybe you paint the thing, but now you have to go and you have to replace huge conduits, very, very advanced technology. What that means is that insurance companies are paying out those claims, they have to charge more money. Now, why does that impact multifamily residential? How does that impact schools? The reality is if the insurance companies aren't making any money on car insurance, which is $30 billion, half the market, they're going to make their money somewhere else, and they're going to make their money on property, on multifamily residential. And that comes to our biggest problem that we have, particularly in British Columbia right now. And that's we have a very large gap in the market in reinsurance capacity. So insurance companies in Canada, they'll sell you insurance for your house, for this building that we're in right now, and all that gets pooled together at the reinsurance level. These global carriers are looking at Canada and saying, well, is this the right place to invest our money? Interest rates are going up. I can move that money and I can flow it elsewhere. Do I really want to insure a bunch of students? Well, maybe I'm going to put my money into a high yield bond or somewhere that seems like it's a little bit safer in return for them. So we've seen 115 billion leave the reinsurance market. The other big thing is that we've seen return on equity flowing out, capital flowing out of the reinsurance markets. There is things like the Ukraine war, things like hurricanes and that you say, well, how does that impact us today here in British Columbia? Well, that money gets pulled together, and the reality is if they're losing money somewhere else, they're going to find money and they're going to charge us more money here in Canada. One of the biggest challenges with that is everyone thinks there's going to be an earthquake. Right now, if you want to buy property insurance in Richmond or Vancouver Island, it's not even about how much can you pay or how expensive will it be. There are a lot of places where they will not offer coverage at all from any company at all. So this is a massive problem that we're seeing in these sort of dynamics where we're seeing more and more catastrophic events. We're seeing interest rates and inflation drive capital out of the insurance industry. And it's a tough area, particularly in British Columbia, to insure. And particularly in the Canadian market when you're seeing ice storms and weather patterns like we have. And the last one is tenants really do silly things. We're one of the largest provider, of course, of renters insurance and tenants insurance and multifamily. We've seen all sorts of stuff. When it comes to fire, people love candles. They love, nighttime candle seance, and we're all going to hang out as friends in our dorm, and they love their candles. I make that joke. People are like, we don't allow candles in our buildings. There are candles in your buildings, I guarantee it. The second one is cooking. Everyone wants that comfort of home. They want that recipe. Maybe it's 2 in the morning and they want that special recipe on their hot plate or whatever. Cooking fires create claims. It's a problem. And the last one is smoking. Everyone says, hey, you can't smoke in our buildings. That's a good rule to have. Smoking creates fires. I just heard a story yesterday from one of our REITs. Sitting on the couch, falls asleep, cigarette down, lights the couch on fire, runs out of the building, couch goes to curtains. All of a sudden, now you've got a problem. And you got a problem for 2 reasons, because you got the fire and the smoke that goes billowing down the hallway. So then everyone else is impacted. But then the sprinklers go. The sprinklers that you see produce between 75 and 150 liters of water per minute. So if you have a fire, not only do you have the fire, but you are pumping huge amounts of water, and now you've got 3 stories below it that they have water damage issues. The second biggest claim we see is water damage. So it's the tap left running, it's fire suppression insurance. We see people hang their clothes on the sprinkler and it breaks the sprinkler head. And you might be like, that sounds silly. Hotels and rental multifamily student housing, people are either moving furniture or they are hanging things, maybe it's Christmas lights, maybe it's clothes, from the sprinkler head, and that is breaking sprinkler heads, and that is pumping 100 liters of water a minute into your building. The last one that we see a lot, maybe not as much in the moderate climate of Vancouver, but certainly up north and certainly across the rest of the country, we operate across Canada except for in Quebec, is people turn down their heating because they want to save a few bucks, and then they go away for the weekend or they go back for student holiday, whatever it might be, for Christmas, or they leave the windows open and they freeze the pipes. We see tons of pipe burst, water damage claims because people are trying to be a little bit proactive and it freezes the pipes. So tenants do all these silly things. I don't know if you can see that picture, but they're actually sitting in a boat in their kitchen. There's probably 2 feet of water. It's up to the freezer of water sitting there in the boat. You wouldn't believe it. So when we look at the types of claims that we see, in terms of dollars claimed, 75% of all claim payouts, and this is real data, 75% comes from 3 things. Water damage, like I just described, fire, which often goes hand in hand with the water damage. The other one is theft. Now, if you're a multifamily landlord, if you're managing student housing, okay, theft isn't your property getting stolen, but you're still responsible. We've heard a lot about security, safety, locking mechanisms. And so even though it's the student's property, we want to try and help these students be in a better situation. Now you can see on the other side, in terms of frequency of claims, okay, maybe you can't see on that side, but frequency of claims, we see fire is a lot less of a frequency, but when they happen big. Water damage is 37%. This happens all the time. And of course, students are invincible. Most people are under indexed to how real it is that somebody above them is going to leave the bathtub on or the tap on, how real it is that there's going to be a sprinkler that's going to go 2 floors up and their unit is now going to be impacted. Now, if you're a student, what does that mean? It means you got to move out. You got to find somewhere to live or stay. And it also means that everything that you own is in trouble. Now, if you're a landlord, you're sitting there saying, am I going to go get $1 million from this student? Am I going to call their parents and say, hey, you're on the hook because they were having a candle seance and you owe us the money now to fix this thing? It's a really tough situation because most tenants are uninsured. About 50% of all tenants in all segments in Canada don't have insurance at all. And in student housing, people often say, we don't want to force it. You know, the extra money is important to them. the extra money comes through all the way because either the landlord's paying for it, the school, or you're trying to go back to that student and say, hey, you know, we're trying to get our money back. So I'm going to talk a little bit about a layered risk strategy and how you can solve this. So most insurance programs, pretty straightforward. At the bottom, you have your deductible or your self-insured retention. Means what you're on the hook for as the landlord, as the multifamily owner or manager, student housing manager. You're saying, hey, listen, we'll take that first layer. Well, if it's a $50,000 claim, if you know, a little flood, hey, we'll pay for it, fine. Now that comes out of someone's budget. If you're private, you're a REIT, you're off campus, your deductibles are generally lower. If you're in a school program, a university like this, you're in a massive pool of universities across the country. You have very high thresholds for what you're willing to pay yourself, but it's all coming out of somebody's budget. And then you have the actual insurance layered on top of that. So at Apollo, here's what we say. We say, we'll take the first $1 million. We'll take that whole bottom layer of the student who's having the candle, the cooking, the water damage, anything that they're insured for is an insured claim. We'll take that first $1 million. So if you're sitting there and you've got all these students and you're like, oh yeah, that happened to me the other day. Somebody was moving a couch and they hit the sprinkler head, or yeah, we had somebody cooking, or yeah, and trust me, if you've been in multi-family housing long enough, you've seen every sort of claim that happens. We're saying we'll take that first $1 million out of the bottom of the layer and we'll manage the entire thing for you. And we'll integrate to Yardi. We'll provide you digital evidence of every insurance policy, both for the student, whether it's one that they get through us, or maybe it's their parents' policy. We'll manage that entire thing for you. Now, what that means is at the top layer, if you're a private, you're off-campus housing, or you're a smaller school, it means you're going to save money because all those claims that previously came out of your budget, you're going to hand those off and you're going to pass those off to the tenant insurance program, and you're going to be in a much better position for the amount of money you're spending, but also when things go wrong, which they do literally every single day, one of these things is happening across the country, and you're in a much better position. And so there's 3 paths that you can get everybody insured. One of them is you just say to us, hey, we're just going to enroll everybody. Every student that moves in, we get their name, and we're just going to enroll every single one of them into a master program. We take care of it, no problem. The other option, the second one, is an e-commerce experience. And so because we built this company just in the last 5 years, everything we do is mobile friendly, it's fast. We take all the data about your building, we upload it into the system. We don't ask any questions. I'm not asking you how old the thing is, what it's made of. The student doesn't know, they don't care. I've seen school websites that have it all listed out, where it's like, this is a 1973 building and you're supposed to go and tell somebody that in a storefront 9 to 5. Most of our transactions happen in less than 2 minutes, entirely digital end to end. And it's all entirely mobile. So we know mobile is the future, particularly when we're talking about the student demographic. So our second option is that auto enroll, or we can do a hybrid program. And some people prefer a hybrid program. And really what we say is, all right, you know, they can buy from us. If they want, they can send us their parents' policy. We never think that's a good idea because then the claim just goes to their parents' policy, and home insurance is in its own same problem as all the other property stuff we talked about. But we can do a hybrid program for you where we're still taking that first $1 million layer and we're solving this huge problem that happens at every single multifamily, every single student housing organization. And so those are the benefits to you as a landlord, but you know what, it's really good for the student. And there was an interesting comment, I think it was on the last panel, it said needs versus want. Great survey, amazing turnout to get 100 people to answer those questions. None of them are gonna say, you know what, I think insurance. You know what, that dining hall thing, you know, kick that, we should get insurance on this campus. No, of course they're not going to, not a chance. But where are they gonna go tonight if that building has a fire? Do they have the money to put out? So number one, they get a place to stay because we're gonna pay for them to go move into a hotel, get a short-term rental, they got somewhere to go. Now you as the landlord also don't have a bunch of students standing on your front lawn, not sure where to go tonight. And you as a student now have a few bucks, you got $2,500, $5,000 that you can go stay somewhere else while they fix your place. So that's a big benefit to the student is where do I go tonight because 2 floors up, the pipe burst. The second one is theft. 25% of all the claims that we see are theft claims. We had a great presentation talking about people stealing their packages and boxes and everything like that. We insure 6 roommate units. You don't know everybody around you. You don't know if anyone's locking the door or not. Theft happens all the time on campus. People are also way too trusting. I don't know if you had a chance to walk around the sub today, see how many laptops are sitting there next to a Starbucks cup and they've just gone away for a minute. those get taken all the time. And so it's really good that they have insurance. They're not going to, again, put their hand up and think it's important, but it's really important for them to have that option to say, hey, something got stolen, I got robbed, whatever it was. And as a result, hey, we're going to give you some cash. We're going to buy you a new thing. So you got somewhere to go tonight. We're going to replace your stuff. The claim doesn't end up falling on their parents or their families. I've seen situations that get really ugly where they go and they say, hey, listen, you owe us $500,000. You say that to an 18-year-old, you go home to their parents and say, hey, listen, you're on the hook. Your kid was negligent. This is what they did. This is what it caused. You're paying for the damage. It gets really, really ugly and really, really challenging to recover that. It's a really ugly lawsuit to manage, but these things happen all the time. So it's really important if they have their policy themselves, fine. First $1 million, no problem. Everybody's pretty happy. It's what, 15 bucks, 12 bucks a month? Totally worth it in the end to be able to make sure you have that layer that just protects everybody. And the last one is, we talked about catastrophic events. So there are ice storms, there are floods, there are fires, overland water, there are hurricanes. All right, so you say to all your students, especially international students that are here, where are you gonna go when campus has to close because you got an ice storm? Where are you gonna go when that building has a big event, it has a big challenge, right? And so we say, hey, you know what? Again, this is a great opportunity for them in their own personal exposure to something that has really nothing to do with the roommate or anything even silly happening. The reality is these storms we saw last year, $3.1 billion worth of storms. These storms are going to keep happening, and that student's exposed. Now, they don't have a plan for that. This is an opportunity to help them have a plan because you're going to help them make sure that they have insurance. So it has benefits for the landlord, and it certainly has benefits for the students. We're one of the largest providers of this in the country, and we've really built this program specifically to solve this issue, to make it easy on you to implement, but also to make it easy on the student. And again, I get it. No one's waiting in line overnight for the insurance policy. They'll do it for the iPhone, maybe for the new sneakers or whatever it is. Insurance isn't that exciting thing, but it's really important. And as you see them grow and develop, and we track a lot of these people as they renew, they move off campus, they're going to continue to have insurance as a result of that, which is a good thing for them in terms of that growing up that they do when they show up on campus. Feel free to reach out. I'm around. I only had a short session. I know we want to stay on time, but appreciate you taking the time to listen. Hope you have a fantastic rest of the day, and we'll see you tomorrow as well.